What's going on, duties and dudiettes?
I hope you're having an absolutely phenomenal weekend. Well, I guess I hope you're at least watching this on the weekend or at minimum before the market opens on Monday, because we got to talk about a lot of important stuff. My goal in this video is to give you a little bit of an idea of what's been playing out over the first week in the stock market in September. But most importantly, I want to get you prepped up for the next 2 weeks with a huge emphasis on this upcoming week, because we're expecting a lot of fireworks. Before we get into all the nitty-gritty details, I want you to comment below. Do you think the high that we just hit on Friday is the high for a while and we're about to pull back? Or do you think we're actually about to blow it out of the water and continue to rip up and away? Let me know in a comment below. And hey, while you're doing it, if you want to help me out, don't forget to like and subscribe, turn on your notifications. That very much helps with getting this video in front of other degen traders like us who might be enjoying the content. With all that out of the way, let's roll the tape. To kick this off and have a better idea of where we're going, we should understand where we're coming from. So when the market closed on Friday, September the 5th, here was the official headline. Stocks closed lower as slowing labor market boosts rate cut hopes, but fans economic fears. So a couple things to dive in there first, but really what you probably care about is price action. We opened up at a new all-time high on Friday on the S&P 500, just above 6,530, and then promptly sold off. But yes, overall, higher highs, higher lows, clearly a bull trend. In the Nasdaq, similar situation. We opened up, sold off, but hey, nice recovery. We did get a technical breakout, not a new all-time high, but we are not far away from it. And if you look at the small cap sector, remember, it is going to be the Russell 2000 that will most likely benefit really from cheaper money, the Fed rate cuts and all that good stuff. Higher highs, higher lows, actually closing green on the day. So overall, looking pretty good. And for those of you who like crypto, hey, we're seeing potentially our first higher low in a little bit. I would love to see this recovery above the 50 MA, maybe push 114,000. At that point, maybe we could talk about 117,000 and some change. So as you can tell, in the grand scheme, as in like the daily chart, weekly chart, monthly chart, we are looking good. But if you were diving into what happened in the day, if you're a day trader, scalp trader, something like that, you might be like, whoa, we actually at first were fine. And then 20, 30 minutes into the day, we just got absolutely pummeled. Absolutely pummeled. Here's a look at the heat map of the S&P 500, and you can see that we were led to the downside by major tech plays and financial plays. So clearly this is coming back to that first article where it's like, okay, what is going on? We got these job numbers that weren't so good, and that increased the chance of a Fed rate cut. But the question is it so bad that it's like now legitimately bad and we have something to be concerned about? So as you can see, financials really sold off, certain tech plays really got hit. But what's interesting about that is the big guys underneath, this is tracking what's going on from the big players in the New York Stock Exchange. They were actually buying all day on Friday. Even into that sell-off, they said, you know what? We're going to take this little mini discount. So as that was happening, we can see kind of what happened was more so because of the options market. And you can see right here, this is the delta flow on the S&P 500. It just got absolutely pummeled. And if I show you the distinction between calls and puts, the calls are right here, the green and the orange. You could see from about lunch until the end of the day, it was just nonstop call selling. So I don't want people to panic as in a ton of put buying and people are getting all these hedges. No, it's actually kind of people just locking in, especially on the 0 DTE. And we saw a similar situation in the Mag 7 where the delta overall putting calls and puts together just vomited all day. And really when you look into what's going on underneath, same thing. Around 11:45 to the end of the day, a lot of calls were being sold, but the major thing being sold, they already expired on that Friday. So really what we saw, it was basically this massive program that started in the morning, ended at the end of the day, and it was a bunch of call selling. So with that out there, I hope we're all a little bit on the same page of this narrative of like, okay, what's going on with the Fed rate cut, monetary policy? Obviously, we want inflation to come in at expectation or lower, and maybe the job market, if it weakens a little bit, that's going to spur the Fed to actually cut rates, but we don't want it to be so bad that people all of a sudden start to talk about the R word, the recession word. So that's the overall narrative, at least where we're at right now. So let's kick kick this off of, okay, what's next? It's good to understand where we've been, but how we make money is understanding where we're going. So as I always do, let's talk about seasonality. Seasonality over the past 20 years, September is a weird month. The first 2/3 can be bullish, and then we sell off into the conclusion. Once again, this is on the past 20 years worth of data. If you look on the last 5 years worth of data, September is actually just straight up bearish. It's actually the most bearish of the entire month, and it's 4 weeks in a row of just selling. And same thing in the past 3 years. It's the most bearish on the entire month as it relates to SPY. And then when you look at the weekly, same thing. There's this period of bearishness. So seasonality is bearish, but once again, seasonality is not the end all be all. It tells us about tailwinds and headwinds, but it's not one of these things that it's like predestined or anything like that. This time around, it's going to be decided on really the next 2 weeks as it relates to some inflation numbers, some jobs numbers, and really the monetary policy decisions from the Fed. Traders push off inflation risk as they bet on smooth rate path. This is the big show of the upcoming week. Wednesday, producer price index. Thursday, consumer price index. And then on Friday, we're going to get the Michigan numbers for consumer sentiment and also for their inflation expectation. This is half of the puzzle for everything that's going to be considered by the Fed, while the other half of the puzzle is going to be what in the world is going on with jobs. These inflation numbers are one half of the puzzle, and then the other half of the puzzle is really the job numbers we just got last week, and putting those two together is really what's going to be deciding the upcoming rate cut, which is going to be going down on September 17th. So not this upcoming week, the week after. As I'm filming this, there's an 87% chance of a 25 bips rate cut. And actually, wow, this is kind of impressive, an 8.6% chance of a 50 bips rate cut. So once again, this is on Polymarket. If we look at the odds on call sheet, 87% chance of a 25 bips rate cut and 10% chance of a 50 bips rate cut. And then also, if we just look at the Fed Watch tool, they're saying 90% chance of 25 bips, 11% chance of a 50 bips. So all three of these are pretty much in alignment with each other. There's no like big outliers. So it seems as if it's more likely than not, yes, 25 bips rate cut, but it's all going to come to these inflation numbers. The way we would be in this, so let's say statistically abnormal bucket, the least likely one of a 50 bips rate cut, if this is what you're betting on, which would most likely send the market like not just to new highs, but very clearly to new highs, would be these inflation reports, the PPI and the CPI coming in way lower than expected. It not just at expectation, but I'm talking super cool inflation. If that happens, that's the situation where the odds of the 50 bips rate cut is going to increase. Now, with all of this, remember when it comes to monetary policy, inflation, don't forget the other part of this discussion really is what's going on with the trade war. The White House is exploring how to keep Trump's tariffs if the Supreme Court strikes them down. I just wanted to really quickly remind you of this particular sub-narrative to the overall story, because obviously it could be impactful. So even if it's sped up, we're probably not going to hear about it until November-ish. So once again, just putting it on your radar, but nothing crazy to pay attention to at this exact moment. Now, all this information, I do put it together. It's a free newsletter, 100% free. It comes to your email inbox every single Sunday. I break down what's going on in the market, a little cheat sheet for earnings. Maybe you're watching, I don't know, GameStop, Oracle, Adobe this week, a little cheat sheet for all the major macroeconomic events, obviously Monday through Friday. Probably the most useful is the seasonality of each individual day. Monday is leaning bullish, Tuesday is neutral, Wednesday is bullish, Thursday is neutral, and then Friday is also leaning bullish. And then I also give you an update of how some premium selling strategies are going. So like I said, 100% free, sign up. It's in the description of the video. And before I let you go, I hope you commented at the start of this video, are you bullish or bearish? But just in an effort to be transparent, I want to show you my current positions. As of Friday's market close, I decided to be bullish because I think that it's more likely than not that inflation comes in at expectation on Wednesday and Thursday of this week. If it's cool, that's even better. I'm expecting the odds of a 25 bips rate cut, maybe even a 50 bips rate cut, to really start to pump up. I believe that that's going to be received well by the overall market, but specifically also what is going on in the Russell. That's exactly why I have SPX calls and Russell calls. Then on top of this, obviously I have Tesla and Bitcoin. So why am I in Tesla? Why am I in Bitcoin? Well, Tesla is just a pure math play. The upcoming 2 weeks in a row for Tesla are very bullish. Just pure seasonality. The upcoming weeks, Tesla has performed well in mid-September. So it's it's a pure math play. As for Bitcoin, well, as I kind of alluded to at the start of the video, this is the first higher low we've seen in a while. Lower highs, lower lows, that's clearly bearish. We just took out a recent high. I'm seeing a higher low. I'm just trying to see if I could get in at the bottom and potentially ride this all the way back up. So that's more of just a pure charting technical play. So I just want to be open, transparent. Those are the 4 plays I have live right now. Feel free to, I guess, cook them if you absolutely hate them, or if you're thinking, hey, maybe I'm onto something. I would love to get your thoughts in a comment below. That's what I have for you. I hope you crush it in the upcoming week. I appreciate all the good vibes. I'll catch you in the next one. Peace.